Good morning. Wednesday, January 17th, market analysis. Stan Ehrlich, 9:55 California time, just a little bit after the middle of the normal trading day for, stock market stuff. I always start out with the stock market indexes and typically the E-mini, and here we go. The March E-mini futures contract has now made new lows and looks fairly likely, but no guarantee, that it's going to close in new lows for the previous 6 trading days, almost a week and a half. A new low closing price for a week and a half. And there's only about 3-4 lower closing prices than we are right now and the last month. So it's not going to take much at this point from where we are now at 47.60 to get down to and below the 47.01 lowest low, and that exact number was 47.02 flat. That's the lowest low for the last month. That is the downside breakout on the double top formation that I've been talking about now for several days. The minimum downside objective expected but not always reached is 45.61. I think that more like 45.90, 8.99, something a little bit below 4,600 should be the point at which in about 2 weeks or so, the market's going to stop going down and turn right back up again. We shall see. Questions, comments, whatever, info@ersignals.com. You can always reach me at that email address. Thank you. So the next chart is the Spider Daily, which is extremely similar as you would expect. They're both the S&P 500, but there are different trading hours. It's got a double top. It's got new lows for about the last 5 days. It looks like it's going to make lower lows and a new low close. Whoops, excuse me. Catching up to the, I'm hitting the wrong keys here. Catching up to the E-mini, which is closer to making those new low close situation things. So the same, my expectation is down about the same, but the price is 454-ish, a couple of weeks, turn back up. I really don't think it's going to come down far enough to close this. That shouldn't happen. To close this old gap that I had marked weeks and weeks ago. So I think that's not in the cards, to be honest with you, but I'm still leaving a marker in that area where that old gap was in middle of November. Next chart, Spider, 1 minute. It's a 5 minute. We just made the low of the day, challenged almost a new low and bounced off of it. And on a 5 minute chart, it looks a little like a double bottom, but it's small and it won't go too far. And I don't trust it, blah, blah. And frankly, I think we're going to make new lows anyway before the day is over. Next, E-mini 5 minute, a little identical situation, no comment. DIA daily chart. This is the Dow Jones ETF. Also somewhat of a double top. Not quite as nice as the S&P, but still there. We're coming down to and trying to break out of the lowest low on January 8th between that week and a half, 2 weeks in size, double top, very small. The whole formation is a month. And that means I'm in need of closing below 370 in order to have what I believe to be a significant downside breakout. Again, ladies and gentlemen, I am not bearish. This is a small downside correction for a couple of weeks, I think, in a long-term bull market. Something along the lines of this kind of thing, which happened in July, August. Now, it did lead to a further break, obviously, and finally a low. And guess what? October again, the October lows. So I don't think we're going to have, 1, 2, 3, 4, 5 down type of move. Just simply a week and a half dip and then up. Next chart. Russell 2000 is not the same. It is now already in oversold condition. It has made quicker than the other indexes, new low and new low closes since it's V-top, not a double, overbought conditions, and just simply turned around and headed south. It does have a small gap to close. I do absolutely believe that that gap is going to get closed 3 or 4 weeks from now, maybe a little longer. But we're going back up, in my opinion, and make new highs for the whole trend and make new all-time historic highs again. I think the Dow made it a few days ago and didn't hold it. And I don't see too much further because of the oversold condition. And now we're bumping into the beginning of a variety of support levels. I don't see too much further down for the Russell 2000. Next chart is the QQQ. Double top, overbought on the first high, gap down a little bit, slipped, stopped at support, some old highs right there, turned back up, double top. And now for the first really good down day, we're down a decent 365 at the moment, but not a lot. And frankly, it's in the upper range of the day, and it's right around where it opened, which was lower, right about here. So maybe it'll stop right in this ballpark and turn down again and make new lows by the end of the day. Certainly, I think before the end of the week in all of these indexes. Next, then March, NASDAQ, futures contract, same story, different prices, same formation, not much else to say. Okay, let's go to futures, and the E-mini from a little bit different perspective. This doesn't look all super dangerous. It doesn't look really big or very important at this point. And I don't have any problem seeing a little bit more of a dip and then back up. Of course, the NASDAQ is going to be the same thing I commented about a few minutes ago, and bonds. Yep. Resistance stopped, overbought condition, turned down, and now yesterday we have new low and new low close for the last, 3 weeks or so, maybe a month. No surprise. Totally talked about this in the last couple of weeks. Now we're probably more than halfway down, and it's time to start looking for buy signals already. Our RSI low today was 25.53, super close to 25. My custom RSI, RSI, I learned from Wells Wilder himself, so I've changed it over the decades, and I like 25. 26 may work for you, 24 could work for you, 25 is good for me. Almost overbought, not quite, super close. Once we get to overbought, it's going to turn yellow. Are we getting close to any other reason to turn up? Yep. And that's the support area. So if it gets into the support area and is still oversold, I would be very anxious to get a buy signal. And we may not, we may simply turn up, but I'm certainly hoping for something like that. It is the bottom of the bond market, October 23rd. You can't get better than picking the low day of a multi-month and or year bear market, and maybe the beginning to the exact day of a multi-month so far 3, and maybe multi-year bull market. I saw it at the time. If you want to go back and listen to my recordings on the day or 2 or 3 before October 23, or that day or the day after, right in that time frame, please. Next, 10-year notes, same thing. We bought almost the exact low day on a green bullish ER buy signal. ER3 got in a couple of days later, very nicely, not perfect. Sometimes we get incredibly close to the exact low of a little retracement, and up you go. Well, this one dipped a little more for a day or so. We got out a week and a half ago, stopped out, and since we're out, it's not made a new high for the trend. It is topped out in overbought conditions, and I do think it's going to come down some more. But probably should lower this a little bit to about 109.22. I think that's a more appropriate downside objective. Now, this is a support area, and I can't rule it out. I can't change that. So there's a chance that it's going to try and bottom out right in this little red zone, and we're already pretty damn close to that. Next, crude. Well, been doing the same thing for a couple of weeks or more. in a support area, not going up, not going down, not staying up, not staying down, kind of a definition of a sideways trading range, and they take the form of a pennant formation like this is doing. Next, natural gas. A little bit more of a dip here. Long-term trend is obviously down. All we did was make a huge new lows into December 13, a nice rally for 4 weeks out of it, got overbought in resistance or a little bit above, but resistance, and now turning down. What the heck can I say? I expect the challenge of the lowest low at 2.139-ish and then lower. Next, heating oil. Same kind of comment, not quite the longer term same picture, but resistance has stopped the rally. We have a new low and probable new low close for the last 4 days, 4 or 5. Yeah, certainly not looking strong. I know we broke the trend line and we might just bounce off of it, but let's get there first, 2.53. And if it doesn't hold, and I don't think it's gonna, then we've got the support line under the market. And then by the time that happens, we're going to be a few days to the right and we'll be at a support level. So maybe 2.325. Yeah, that seems very reasonable. And I'm not ruling out lower than that. Next, gold. Okay, pretty similar commentary, except I'm talking about a breakout of a head and shoulder top. Now, I didn't draw the little arch marks across the shoulder. Late October, bearish engulfing ER sell signal right in the middle of the top. The head, yep, on the high day, my ER signals pull the trigger on new short positions. That is a bearish ER engulfing signal. December 4th, bingo. I didn't know at the time that it might be ahead of a head and shoulder top. And here is, in overbought conditions, the last shoulder high. I've been talking about it for a couple of weeks now, or maybe a little more than that, on December 28th. Now, here we start coming down to the neckline, bounced off of it a few days ago for 1 day. Yesterday started coming down again, and today, the first day, we have a downside breakout, probably closing below the neckline. Official breakout, the downside objective is now a minimum supposedly down to 1,835. That's not a small move. So I am now officially breaking out of a head and shoulder top. Minimum downside objective 1835. Let's see if it works. It sure as heck did very, very well recently in OJ. And in the last year, a few others, including the stock market indexes, some whoppers a year and a half ago. Gold, that's my comment. Oh, we should not rally above the blue line, the neckline, at any point from here on. If we do rally above it, we should not close above it. If you rally above and close above that neckline anytime in the next couple of weeks, something's seriously wrong. And this head and shoulder top may fade away and the distance is not working correctly. Next, silver. Kind of similar. I really can't justify calling this a shoulder, the key reversal on the top of the market, an ER sell signal. Oh, heck yes. But is that really a head also? I just have trouble with that. And this being the first shoulder, so it kind of looks like one, but it's in the wrong place. Usually these are at the end of sideways trading ranges, and definitely, more often than not, at the top of a big rally. That's why they're called a head and shoulder top. Now, this one is kind of at the end of a big sideways something or other, in which, by the way, we got the top on this date in silver and the second high, almost exactly the same price, another bearish engulfing. I couldn't believe it when that happened. I was flabbergasted, whatever that really means. And wham, it just plain crashed. It was incredible. And of course, we got the bottom given, right? Well, we got a little lucky. Green on the bottom again. Okay. Next chart. Platinum. Buy signal 2 days ago did not work. It opened way below the bid, the green dots for ER3, but it right away hit the stops. So we took a loss really very quickly and we're flat. Bad signal. It happens. But these happen also. Buy on the bottom, sell on the top, buy on the bottom. I can't say on the top, but kind of close. And that was a good signal only for a small period of time. Very small, a day. So it's an iffy one. But a lot of those are great. So what the heck? Oversold right now, back down in the area where it bottomed out before. I'm not going to be surprised if we get a little bit of a rally, which could be back up to, well, frankly, my previous signal low 2 days ago, 917-ish. But I gotta look at the bigger picture. Bear trend. Rallies have failed. New low closes, lower lows over time has happened. Doesn't seem to want to stop. Momentarily oversold, bounce maybe for a few days, and then down again, bearish. I am looking for 857. Next, high grade. Again, basically bearish. Support is a little bit under the market. I wouldn't be surprised to see it bounce off of it. We are close to being oversold. If it nosedives for a day or two more, we will get oversold into this support area. And so let me grab this and pull it to the right a little bit. I can't refute, I can't expect much different. Into the red, maybe oversold at the same time, a bounce, but what's the bigger picture? Trend line broken, didn't work. Back below it again last week. Highs all lower than each other since last January, a year ago. Lows on the average, roughly lower lows for the last year. That defines a bear trend. I've got a very sloppy, broad channel drawn, and I thought we broke out of it, but apparently not. So maybe I should, change something here and make the channel like this instead. I don't know. Either one basically covers the same ground. That looks a little more parallel. That's interesting. Next chart, soybeans. Well, what can I say? Buy signal didn't work. Oh, wait. This is not a buy signal. I said that yesterday. It's because of a complimentary tick on Martin Luther King Day, Monday. And that's really not a market trading day. But the code thinks the open, high, low, close on the previous day was one price, therefore causing a bullish engulfing easily and incorrectly. Shouldn't be green. No signal. Yellow, yes. Oversold, yes. No signal though, because of the holiday. And we have a new low and a new low close. Well, almost a new low, but almost definitely a new low close for the trend down. Now, my next support area, we already bounced off of once. We're still oversold. We could have a small little double bottom or something like it and bounce. I got to watch for that. But that hasn't started. The bigger picture, relatively short-term, intermediate, and longer term, definitely is a bear trend. Yeah, we got the bottom here. Great. Yeah, we got the low here. Great. And yeah, we got the high here. Great. Not so good. Not so good. But these others were profound. This one was a bad one. I can't help it being bearish. Maybe a bounce. Next one's bean oil. What the heck? Same situation. Oversold. Maybe a bounce. Trend is down. Next. Meal. A little higher than support. Bouncing off of 2 days ago, a bull trend line. Not going very far. Bearish engulfing today. Not an ER sell signal, but still a bearish engulfing. And normally a bearish engulfing in Japanese candlesticks is a sell signal, an indication that the market's supposed to go down some more. I believe it. So I think we're about to break that trend line and test this next support area around 335. Next, I've got corn. Oversold, so at any time I might get a buy signal. I haven't yet. Still got to stay bearish, but very, very cautiously. I would tighten up my buy stops above the market. I would not go short under these conditions, and I'm waiting for a buy signal, which could cause a very minor rally for a few weeks in this long-term bear trend in corn. It's going to go, as I've been saying, by the way of wheat. Next chart, wheat since the war and an ER buy sell signal. Whoops, sell signal on the very top day after an incredible whole series of limit up days in a row. Well, you can't get better than that. So I think we're going to see new lows. Probably very soon. And if there is a bounce, I don't expect it to go any further on at the most, 645-ish. And we're 584 at the moment. That's reasonable, not gigantic, but it's a bear trend. Bearish, looking for lower lows. Next, live cattle, an okay buy signal, not the best. Ended up with the current inputs in our code to have a very small loss. Could have taken some profit if I chose, but I wanted you to see the default settings, which are editable. And here's a good example of that. As this trade continued, I changed my inputs a little bit in order to tighten the stop a little faster. Great trade. And again, I want to reiterate, if you have questions about this, there is a scalping version of the ER1 and ER3 that is only for day trading. I don't show that to you because it's too detailed of information, and my little 20-30 minute YouTubes will end up being a lot longer. So the longer term trades on daily charts and a little longer opinion. Bearish, looking for a top, maybe pretty darn quickly here. In live cattle, I expect the lows of 165 to be challenged and probably broken in a few weeks. Next, live hogs came up to resistance after oversold. I would expect to see this red zone support level tested again. And ladies and gentlemen, I think there's something wrong. TradeStation may have burped on me a little bit here. This probably should be down here. And maybe I'm going to squeeze it into Marsh's lows. Yeah, I'm going to lower it some. So if this support area 73, 72 is broken, then 65. Next. OJ. This has been flat out spectacular. ER sell signal on the top of the market on this candlestick, October 31 signal. We got the exact high day on an ER sell signal on the top of the market ER sell signal. We missed because it wasn't overbought on the last shoulder high right here. You have been seeing for weeks and weeks and weeks that formation develop. I outlined it. I show you what it should do, which has a minimum downside objective of about 288. Today's low, 290. As I like to say, close, but no cigar yet. We could still get to 288 today. Now, unfortunately, we got a buy signal last week on Thursday. It worked for about a half a day, Friday. Then it started to fail. In the process, we did get into an ER3 on Monday of this week, Tuesday of this week, and we got stopped out today. Not a big loss. We don't take big losses. We do take fantastic profits when we can. Next, cocoa. Overbought for the first time today on the way up. So I've got to say the usual. We're getting close to a rally high. Downside objective when it turns, 4,320. And then up again. Next, coffee. New low close. Hey, support didn't hold. It tried. And then kaboom, broke out of it to the downside. Here is a new low and a new low close since that occurred. And I have to expect lower levels. This actually has some appearances of a shoulder overbought, head overbought. And the head is a little tiny head and shoulder by itself. How about that? Pivot point, breakout, a little fishy for half a day. Down you go, kaboom. Probably already met its minimum. And that's just for this week or week and a half formation. The bigger one, because of that high a few days ago, has now established a pivot point for the neckline, a neckline break on a closing basis, and should be starting a move down, and I'm just going to eyeball this real quick. Yeah, it makes sense. All the way back down to the lows in sort of July, definitely August, September, October. 145, give or take a bit. Next, sugar to sweet, not overbought. The rally may not be over yet. I could see some more rally up to resistance at 23.6. But what the heck, it's a bear trend. It could turn down at any time. I got no signal. I don't see that happening today. So mildly friendly, but basically neutral to bearish longer term. Next, caught in the rag. Higher high today, not hanging on very well. Gigantic, big sideways, nothing here since October of 22, a year and a third ago. So I'm kind of waiting for the support level to get broken. I got to basically be bearish. A little slow, a little neutral, but basically bearish. And platinum, I don't know why I have, this is actually a different chart. And back to the E-mini, low and last, 411 lower. The DIA 1.5, and the Qs are 480 lower at the moment. This market looks like it is doing exactly what I wanted starting a couple of days ago. Let me get to the S&P spider with a candlestick. And yep, we are just basically low and last. I wouldn't be surprised if we dropped a little bit more also today. It's not that big a down day, 4 points plus a little. 5 and 6 is getting to a significant day these days. And if you get more than, say, 6 or 7 points lower, and it sure could happen, that's pretty much a large down day. And please remember, unfortunately, in COVID, we were down 10 and 20 and bigger in a single day. Huge. Obviously, thank God we don't have the same situation. But keep in mind, 4 points is really not that huge. Have a great day. Mañana.